Welcome to the Deep Dive. I'm your host, and today we are jumping straight into a massive April 2026 Morgan Stanley report. It is called Laying the Foundation.
And I am your expert. This report really outlines a huge identity shift for them, like moving away from just making cars to building a literal physical AI empire.
So for you listening, let us get right to the core conclusion. Morgan Stanley says the near-term upside is just completely capped.
Yeah, I mean capped because they're spending billions on AI infrastructure right now. But the actual commercial rollout is super slow.
But wait, the Q1 earnings look like a massive beat, right? I mean, auto gross margins beat expectations by 340 basis points.
But you have to look closer. That was heavily padded by a $230 million warranty reserve release.
Oh, I see. So it is just a one-time accounting thing, like finding cash in an old coat.
Exactly. It is not organic growth.
Okay.
And it is the exact same story with the energy sector. They beat by 1,150 basis points.
Because that included $250 million in tariff rebates, right?
Yeah. I mean, the underlying business is okay, but they are facing huge margin pressure from tariffs and increased competition.
Okay, so the near-term cash flow is under pressure. Let us look at the three big data points shifting this whole narrative. First up is the CapEx explosion.
Yeah, this is massive. They raised their 2026 capital expenditure guidance by $5 billion.
Which brings it to over $25 billion for the year, right? That is just staggering.
It really is. And because of that, Morgan Stanley forecasts they will burn through $11.6 billion in free cash flow this year.
Wow. Okay, so the second data point is what I call the Hardware 3 bombshell. And this one is kind of crazy.
Oh, absolutely. The report basically says Hardware 3 cannot run unsupervised full self-driving. It has literally hit a tech ceiling.
Wait, but that is the hardware in like millions of cars right now. What does that mean for the owners?
Well, Morgan Stanley estimates about 3.5 million vehicles on the road have Hardware 3.
So that is like 40% of the entire fleet just hitting a wall.
Exactly. I mean, they just do not have the compute power or camera resolution for true unsupervised autonomy. You know, the kind where you can actually fall asleep in the backseat.
Right, because the computer has to process high-definition video and make millisecond decisions without the cloud.
Yeah, and the hardware from 2019 just cannot handle those advanced neural nets.
That is a huge bottleneck, which leads to the third data point, the sum of the parts valuation.
Right, so they have a $415 base case price target, but the core auto business is only valued at $45 a share.
I mean, that is barely 11% of the total value. Where's the other $370 coming from?
It is all software and AI. Network services is $145. Robo-taxes is $125.
And humanoids like Optimus are $60, right?
Yeah, even with a 50% probability discount applied. And then energy is $40.
So if you are only looking at them as a car maker, you are missing like 90% of the actual financial model.
Right.
The cars are really just hardware terminals.
Exactly, which is why they're spending that $25 billion. It brings us to the core driver.
Right, the physical AI infrastructure.
Yeah.
I mean, they were building something called the TerraFab in Texas.
Yeah, it is a $3 billion research fabrication plant. They are literally making their own semiconductor chips.
And they are using Intel 14A process for this, right?
Yeah.
Like squeezing maximum power into a tiny space.
Exactly. They need highly specialized neural net processors, not just off-the-shelf chips from NVIDIA.
Because general-purpose chips are for everything from generating images to running language models.
Right. Tesla needs chips explicitly designed to navigate physical space in real time. And controlling the fabrication means they own the entire supply chain.
Okay, so they want total vertical integration.
Mm.
But what is the core risk here? Because reality has to bite at some point.
The biggest risk is just the timeline. The report explicitly calls it slower validation and lumpy growth.
Like with the robotaxis,
Yeah.
the miles driven are way up, but the actual city launches just say preparations underway.
Right, because rigorous safety validation takes a lot of time. You cannot just move fast and break things with 2-ton vehicles on public roads.
So there are no hard dates. It is just slow and steady.
Exactly. And you mentioned lumpy growth. The energy storage business is seeing that too, right?
Yeah, municipal permitting and complex grid delays are slowing things down.
Yeah, they actually dropped 2026 deployment estimates from 59.1 gigawatt hours down to 55.3.
Because building large-scale infrastructure is inherently unpredictable quarter to quarter.
Exactly. It is a growing business, but the timing is incredibly lumpy.
Got it. So with all that, what is Morgan Stanley final investment advice?
They are maintaining an equal weight rating. It is calculated caution.
So they're balancing the incredible 2040 AI vision against the really expensive near-term headwinds.
Exactly. The stock is fairly valued right now because the journey to that $415 target is going to be incredibly volatile and expensive.
That makes total sense. Before we wrap up, I want to leave you listening with a final provocative thought.
Yeah, there is a fascinating philosophical question here about the future.
Right. If the entire $125 robotaxi valuation relies on a flawless, closed, automated network.
Does a human manually driving a car eventually become a liability to that network?
Exactly. Like an unpredictable variable that just messes up the algorithm. Do they eventually have to stop selling steering wheels altogether?
It is definitely something to think about the next time you see one merging onto the highway.
Absolutely. Thank you for joining us on this deep dive. If you want to keep cutting through the noise and understanding the data, please subscribe to the channel. The next deep dive will be even more exciting.
Please note this video is for research and analysis purposes only and does not constitute any investment advice.